Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mirhighlights with the Bulletin Board Heroes here on Share Talk for Tuesday the 15th of September. Starting off with 88 Energy, where it's too good to resist after last week's gap to the upside through 0.3 pence. We've also broken neckline resistance from the post-April period around the 0.35, where it's 0.35 pence level as well. So above that, and especially above the floor of the big gap there from April at 0.4 pence. We're looking for a potential target here as high as the top of the rising trend channel from April up towards 0.7 pence. End of day close above the last week's resistance of 0.45 would really seal the deal, but above 0.35 looking pretty bullish for 88 Energy. Stock which has been one of the big winners of the year and still relatively below the radar, even despite a few people trying to knock it, is All Active Asset Capital. A wonderful progression higher with the basically sort of step-by-step fashion, so sideways consolidation, support above old resistance, all the right things there, and actually we haven't been below the 50-day moving average for over 6 months, so that is pretty impressive as well. Current setup is that at least while we're above the initial September resistance at 6.4 pence, on an end-of-day close basis, we're looking towards the top of that rising trend channel from July as high as 13 pence. Time frame on that as soon as the end of next month. Good to see another stock which, one of the stocks which gets a bit of bear bashing, Bidstack proving people wrong on the fundamental front. Here you can see the shares have gapped up above the 50-day moving average at 5.12, and at least while we're above the 50-day line, we're looking for a retest of August resistance towards the 8 pence area. Very, very difficult chart, very spiky, and lots of bull and bear traps there, but I think the overall pattern here is above 5 pence, looking towards the 8 pence retest. Disappointing, obviously, that we've fallen back again from the 200-day line today. So if you are a little bit cautious on the shares, maybe wait a bit longer for that to be broken around the 7 pence area. Chariot is next. Surprising winner over the last few days, but we managed to hit the 4.75 pence target there at the top of the December price channel, and now we're looking for what the next level may be. Best suggestion at this stage is that line of resistance there from last August, heading up to 6.5 pence, so basically above the 4.5 pence zone, looking for 6.5 pence over the next 2 to 4 weeks for Chariot Oil and Gas. Today has been a bit of a mini Pharma special, because there are quite a few of them around and moving around with the latest COVID scare that we are enduring. Nice consolidation here for 4D Pharma within this bull flag support at the moment coming in. I suppose £1.20 plus, which was the old November resistance area, so above 120, looking for the top of that rising trend channel from May last year, heading as high as £1.80, and just taking out the early resistance of last year. So pretty impressive stuff there if we get that. Next stock is Genedrive, which was certainly the stock of yesterday, and it looks as though the way things are going is going to be the stock of today. The break of that line of resistance from July, after an extended consolidation, nearly 3 months of consolidation, did open up the prospect of a move towards the top of the rising trend channel from July, which I tweeted out yesterday. That's 145 to 150, in fact, the target there. And that's valid at least while we hold above yesterday's intraday peak of £1.15. £1.15 also featuring in the resistance area that we had on the way down in July, but above £1.50, looking towards 145, probably 150 even for Genedrive. Stock which illustrates how previous companies which were sort of written off have bounced back in 2020. One of them is Great Western Mining, which is now well above the neckline resistance of last November at 0.18, well, we're above 0.18, looking for 0.32, which is that October resistance line projection on the daily chart. Time frame on that, hopefully as soon as the end of next month, possibly even the way things are going, the end of this month. Wanted an update on another persistent riser, Jubilee Platinum, where you can see that the shares have been placed within this rising trend channel in place since May. Price action here since the March floor, not too dissimilar from the price action of AAA, and obviously not quite as good, but pretty good nevertheless. And the view here is that at least while we're above the floor of the channel, the July uptrend line at 5.5 pence, looking towards 7.5 pence at the top of the May trend channel, hopefully by the end of next month on that situation. Mega Diagnostics, another retail investor favorite, which is coming up with the goods at the moment. We had at the beginning of the month that resistance line break from May around the 60 pence level. Once that was broken, and or 70 pence was broken, which was July resistance, we're looking for £1. And as you can see from the tweet, the chart that I tweeted out yesterday, looking for 105 initially, and then up to as high as 180 at that April resistance line projection. And 180 hopefully over the next 2 to 3 months. In the case of the 105 target, hopefully by the end of the week, with a fair wind behind it. Stop loss at the moment, initial September resistance at 70 pence. Less high profile situation comes in the form of the next stock, which is ProPhotonix. Here we've had a break of the near-term triangle, post-January triangle, 1.6 pence, and while we're above 1.6, looking for a top of 2019 price channel target, 1 year price channel as high as 4 pence over the next 1 to 2 months, perhaps a bit sooner, but looks like there's been a decent breakout, albeit in a stock which is looks very illiquid and probably has a horrific spread as well. Just a couple of stocks to go now. One of the few IPOs of the year has been Pensana, and basically after a slightly shaky start with the testing of the 20 pence area, we've basically been uphill all the way. And this has really worked on a technical point of perspective as well. I think breaking 30 pence really beginning of last month really got things going. Fresh buy signal with a gap at the beginning of the month through that August resistance line, and a fresh one this week with the break through the initial September resistance at 47 pence. While we're above 47 pence, looking for the top of that July trend channel as high as 75 pence, hopefully over the next 2 to 4 weeks, given the way things are going. Good to see the return of Tiziana, which is our last stock of the day. It's been a rather painful retracement from that 300 pence intraday high at the end of July, which seems like a long time ago. We retraced more than half the gains of the summer period, and I suppose the first trigger really in terms of the upside was the break of neckline resistance at £1.33 earlier today. Second line there, the August resistance line there, 135, and third sort of validation of the break of the 20-day moving average at £1.40. Above the 20-day line, looking for the 50-day moving average at £1.61. Hopefully get a weekly close above that, then it's back to the £2 area. But we have to be wary of the fact that this stock has been a particularly difficult one on the technical basis, if not the fundamental one as well. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.